Good day to all. Our group will present the crop reporting and disclosure practice of Genting Berhad, focusing on three areas: group structure, goodwill, and intercompany transitions.
Hi everyone, this slide presents the background information of Genting Berhad together with its subsidiaries, associates, and joint ventures. Genting Berhad was established in 1965 by the late Tan Sri Lim Gongton and is listed on Bursa Malaysia Securities Berhad. The company is one of the largest multinational conglomerates in Malaysia and first became famous through the development of Resort World Genting. The group operates in several business sectors including leisure and hospitality, gaming operations, plantation business, property development, and power generation activities. Besides Malaysia, the company also has international operations in Singapore, the United States, the United Kingdom, Indonesia, and the Bahamas. Major subsidiaries of company include Genting Malaysia Berhad, Genting Plantation Berhad, and Genting Singapore Limited. The group also has associates and joint ventures such as Empire Resorts Incorporated and Genting Power Holdings Limited. Overall, the diversified corporate structure enables Genting Berhad to strengthen its international operations, diversify business risks, and expand its revenue source globally. This slide explains the acquisition of control interest and ownership structure of Genting Berhad. Based on the annual report, Genting Berhad mainly obtains control through ownership of more than 15% voting shares in its subsidiaries. Major subsidiaries include Genting Malaysia Berhad, Genting Plantation Berhad, and Genting Singapore Limited. These companies are classified as subsidiaries because Genting Berhad has control over their financial and operating activities. Under MFRS 10 consolidated financial statements, the financial information of these subsidiaries will be consolidated into the group financial statements. In addition, the group also has associates such as Empire Resorts Incorporated, where Genting Berhad only has significant influence instead of full control. Therefore, associates are accounted for using the equity method under MFRS 128. Overall, the disclosures in the annual report are relatively clear and sufficient for users to understand the group's structure, ownership relationships, and control exercised by Genting Berhad over its subsidiaries and associates.
Let me start with where Genting Berhad's goodwill comes from. Goodwill arises when the company pays more to acquire a business than the fair value of net assets it gets. In simple terms, it is a premium paid for the future benefits. In Genting 2024 annual report, goodwill disclosure under Note 18, in tangible assets, the group allocates goodwill to cash getting units based on geographical readiness and business segment. Here's the breakdown at the end of 2024. Malaysia has 277.1 million ringgit. The UK has 15.9 million. The US has 49.8 million. Singapore has the largest share at 408.7 million ringgit. And Indonesia, which covers planet and oil and gas, has 129.5 million. The group also makes it clear that goodwill is not amortized. Instead, it is tested for impairment every year, and any impairment loss cannot be reserved later. Now let me move how getting test goodwill is impairment and whether the disclosure is clear. The group tests goodwill every single year, and even without any signs of trouble, recoverable amount is higher of the fair value less than selling cost or value in use. Impairment rules go to the income statement and cannot be reserved later. For financial year 2024, no goodwill impairment was recognized. Overall, the disclosure is clear. You can find deal details, fair value breakdowns, and the testing method in the notes. The audit treats goodwill as a key area because the numbers are large. The only small weakness is that the sensitivity analysis could show more specific numbers, but overall, it is useful and easy to follow.
Next, I will present topic C, which is related party transaction in Getting Berat. Based on the Getting Berat Integrated Annual Report 2024, the group discloses several categories of related parties. These included subsidiaries, which are entities under Getting Berat's control and are consolidated into the group accounts. The group also discloses associates, which are entities where Getting Berat has significant influence and are accounted for using the equity method. In addition, related parties include the key management personnel or KMP, such as directors and senior executives, who are responsible for planning, directing, and controlling the group's activity. Other related entities under common control or significant influence are also disclosed. The main types of related party transactions reported by the group include the sale and purchase of goods and service, management and service fees, loans, and financial agreements, as well as intercompany receivables and payables. Moving on to the notes to the accounts, Getting Beran discloses related party transaction annually in its integrated annual report. The disclosures include the transaction types, amounts, and outstanding balances, helping users understanding this transaction. The disclosures are clear, well organized, and generally comply with MFRS 124 related party disclosures. In conclusion, Getting Brand provide transparent related party disclosures, enabling stakeholders to understand the significance of these transactions.
On this slide, we summarize the standard comparison. For subsidiaries and associates, we refer to MFRS 10, 12, 128. Genting discloses its major subsidiaries and associates, so the group structure is generally understandable. For goodwill, we refer to MIFRI 3 and 136. Goodwill is disclosed under Note 18 and tested with CGUs. For related party transitions, we refer to MIFRS 124 with disclosure under the Note 45. Our main suggestion is to make the information easier to read, especially through the acquisition timeline and also clear and summarized tables. Overall, we think Genting Berhad provides a clear and useful disclosure for the three required areas. The strongest area is goodwill disclosure because Genting provides CGU allocation and key impairment assumptions, such as growth rates and discount rates. This helps users understand how management assess impairment. The main improvement is the group structure disclosure. Although the major subsidiaries and assessment are disclosed, a simple acquisition timeline with acquisition date and the percentage interest would make the information easier to understand. So our conclusion is that Genting is suitable for this project because its annual report provides enough evidence for all the three topics. As you can see right here, our analysis is supported by Genting's Berhad's Integrated Annual Report 2024 and the relevant MFRS issued by MASB. And that's all for us. Thanks for listening.